Beyond Meat reporting its first ever quarter of positive net income here. EPS of about 6 cents per diluted share versus the 3 cents that analysts were estimating. So about double on the bottom line. On the revenue front, $92 million, also a beat compared with $82 million that analysts were expecting here. They also raised their guidance for fiscal year 2019. Now they're expecting net revenue to be in the range between $265 million to $275 million. That compares with the $240 million that was their previous expectation. They say they don't provide guidance on net income, but clearly moving toward profitability for this company, or now have reported profitability. But as you can see, the stock is down more than 6% in after-hours trading. We're digging through the filing today, or the earnings release, to figure out exactly what is causing some of this sell-off. But as you know, this has been a big performer since its IPO. So we will get back to you with what we learn. Back over to you.
Leslie, thanks very much for that. Mike, been a big performance since the IPO, pullback of late. I guess the headline also comes out, a full-year guide for revenues, $270 million. It's what, $6.5 billion market cap. A kind of a reminder that even if it has made a little bit of a positive net income, its valuation is extreme.
Right. If this stock has to sink or swim based on the actual numbers that you have right out in front of you, it's not going to work. It has to be the size of the overall opportunity. I would also point out, you say a pullback. I mean, it was like, what, 250 or something at the highs? It has been a little bit immune to the new kind of distribution and partnership announcements. So I do think there's a little fatigue in the story, mostly because of the expectation of new supply of shares coming out. So that's probably where it's trading off of more than anything else. But seems like a pretty moderate response all in all.
A reminder, of course, that the lockup expires, allowing some sort of 80% of IPO-type shares coming out onto release. Stephanie, what's your take here on this one? I mean, there's been some other good announcements recently. Tesco, the biggest supermarket chain in the UK, taking them on as well. But it's just the valuation from where it's run up to.
I think it's exactly what Mike just said, fatigue. It's a perfect word for it, right? I mean, we've heard all these partnerships. The stock has done well. It's impossible to evaluate this company. They only have a 2% market share anyway. So you know that there's a great total addressable market, but it's just going to take time. It's got to grow into its valuation. It's got to grow substantially into its valuation to be justified. So, you know, this is a concept stock. It's a cult stock. And those are dangerous sometimes.
Sylvia, but there is only one real competitor at this point, Impossible Foods. Does that give you sort of, I don't know, any room to get excited about this stock?
Well, I think it depends. So we'll see what happens tomorrow when the backers cash out. If they cash out and the stock price goes down, it might be a good time to get in. You know, we're down from the 234, but it is 3 times the IPO price. So it is one of the more successful IPOs. I think what it'll come down to, though, is it actually better than Impossible Foods? Does the, faux meat patty taste better than the other one? And will people sort of adopt it into their diet? So it's at McDonald's, KFC, Marriott, Tesco. But let's see if it's a short-lived thing, or if it's actually, a evolution of eating these meatless patties.